Hey there, fellow traders. This is Austin. It is Sunday, February 19th. We're in the middle of the month here. And I've got a bunch of things to cover today, visit with you about. I'm going to tell you a story about a veteran money manager that I met a decade plus ago and his wisdoms that stick with me today. We'll talk to you about markets and trading, different symbols. We'll look at bonds and euro and various things. I'm going to talk to you about the educational process here and what I have in store for the future. But first, let me say, I'm well aware of the fact that coilmarkets.com website and also our members only team site are offline this minute right now. And that's because I'm transferring from the current slash past server host to a new server host. I'm not at all happy with where I've been for the past while. I'm having conflict issues with the WordPress software and so on. So the websites are in transition. They're going to come back online at some point. I'm powerless over that process. It's a waiting thing for me from the transfer from the past to the present, future, whatever the case may be. My work email is not functioning. I do not get email, don't receive anything at austinp@coiledmarkets.com, all right, at this moment in time. When the new server host takes over, I'm going to get a flood of emails. So I apologize if you've not heard from me. I've not seen what you may have sent. Okay, so that's what's going on, and there are new things, new changes coming about in the educational process. But first, the story. When I first began trading futures in 2002, and I didn't know, I had a very passing knowledge of them, and I guess you could say practically nothing looking back. And I'd come from the options trading world. Through a mutual friend, I became acquainted with a guy who was a professional money manager. I think he ran several $1,000,000, maybe $10 million worth of money, which at that time was not much. These days it would be in relative to the CTAs then and now. He solely traded the S&P. He solely traded the pit session with one exception, and that was non-farm payroll Fridays. And his MO was to go in, and he would step in one or two pieces of trades. Let's say he was running 100 contracts, which he did. He ran 100 and 200 contracts. He would put on, let's say, 50 and 50 at one price level, and then he'd put on 50 or 100 more at a second price level as the market went in his favor. And he would close that trade for one or two index points. If occasionally price would run away in his favor and he would book something bigger. But all he did was look for $50 to $100 a contract, albeit on massive size, and he was done for the day. And that's it. He shut down. Now, mind you, back then volatility was wild. Markets were flying all over the place. The average S&P daily range was 20 plus index points. That's average. And there were a lot of days it'd be 30 plus, 40 plus, 50 plus, even some days of 100 plus index points from low to high. I mean, it's there in the charts. If you haven't been around for those wild times, go back and look at 5-minute charts in history and see what happened. I mean, today's, and by the same token, crude oil used to average 200 tick, 300 tick, 400 tick, 500 tick days, consistently, not 60 tick days. Okay, so that was the past. And I was new to it, and so I asked this guy, we go back and forth in conversation, he would give me some tips. He was guarded with what he said, but he would give me tips. And I would say, why do you just settle for, 1 or 2 points when all that money is on the table? All of that potential profit is there. You could be, capturing this, that, and the other thing. And his reply was always, it's not always going to be this way. He said the markets are like this now, but they won't be this way forever. And what I do works forever, and my clients are happy. They're very content to open their statements and see, modest but steady, consistent gains day after week after month. And I thought to myself, well, yeah, sure they are, but they're probably a bunch of stodgy old cigar smoking people. They'd be happier if you were rocking it out. Mind you, this is going back a long time, and that was my attitude then. All the money on the table, what you're leaving on the table, and so on. Fast forward a decade plus, I'm right where he was. And I lost touch with him long ago. I'm not sure if he's still in the markets or otherwise. We've gone separate ways, but I'm right where he was. And those words of his stuck with me this whole time. And I've seen it too. I've seen the wild volatility, and I've seen dead volatility with the VIX at 10 or whatever it is now, 6. I don't know. I don't follow it. And, all the major changes, the difference in volume and volatility and the rise of the computer algos. It's just a completely different world now than it was then. However, one factor remains the same. If you get good at going into the market and taking out small pieces on a frequent basis, and on the days that you don't do that, no large losses, then you'll be fine over time. I mean, that's trading. The old adage of bulls make money, bears make money, pigs get slaughtered is an old adage for a reason. Okay, it's a wisdom. Talking about markets, I've said this many times, what I need from a market in order to be of interest to me, it has to have directional movement, so there's opportunity for profit, and it has to be able to trade size. I need to be able to trade multiple contracts. If the liquidity is such that it will just, that it will give partial fills or bad slippage or whatever, that's not of use to me. It doesn't serve my purpose. That doesn't mean it won't serve other people's purpose, just not mine. I need something methodical and something liquid. That's what I have to have. And at this moment in time, the only thing that fits that bill, the only things I should say, are the S&P and bonds. All of the other markets are not liquid enough for me. You, on the other hand, may have different requirements. You might be content to trade 1 or 2 contracts. You might live in a time zone where let's say 12 midnight Eastern to say 4 or 5 or 6 Eastern is your normal hours of operation, whether that's your sleep cycle, work cycle, whether that's where you live elsewhere, that could be. And if that's the case, then you're looking at something different than I am. But the process remains the same. It's identical for us. You need a market that moves methodically, and you need a method that takes advantage of that. All right, so here's the S&P from Thursday and Friday, and these were option expiration days, and they're always squirrely, and I know they're squirrely. And, there was opportunity late in the day. I'm not interested in that. All it did was a dead wedge until 2 in the afternoon, and then it did this dead bleed higher. All right? My goal is not to win every day, and that's what a lot of traders get caught up in. They're like, oh, I'm a day trader, and I invested my time today, therefore I need to see positive results today in order to validate my efforts today. Well, that kind of thinking will get you in deep, deep trouble when you run into a day that's a challenge and you fight it and you fight it and you fight it, trying to make something out of nothing, and all you make is a big mess and a deep drawdown, right? And that stems from that desire to be right, that desire to win every day, and that just doesn't happen. I don't have that desire. My desire is to win every week. I have some minimum goals I'd like to hit. Some weeks I won't hit them, and other weeks I'll exceed them greatly. But if I average those, I'm content. That's enough. And so that takes away the importance of any single day. Any individual day doesn't matter. It's just a collective end. But if you pin your results, you pin your effectiveness or your self-worth or whatever on every single day, positive results, you will implode and you will self-destruct, and that's simply a fact. All right. Nobody makes money in sideways markets. You know who makes money in markets like this? Crude oil in the pit session. Do you know who does? Nobody. Not a soul. Not you or anyone else. Now, crude oil this is the pit session, and this is a dumpster fire, and you didn't make money there on a consistent basis 5 or 10 or 20 days like that, you'll go broke. All right. The pre-market, on the other hand, it's still there. Like I said, if your normal hours of operation are somewhere between midnight, 3 a.m. Eastern time to 6, 7, 8 Eastern time, then crude oil trading is gold. It's still awesome, albeit on limited contract size, because this is where the activity is now. Once NYMEX closed the pit session to open outcry and that's all done, it de-emphasized the activity there. And so now all you see is this in the pit session, just these algo explosions and then this chop. And trying to get short here in the chop ahead of that drop, or trying to get long here in this chop ahead of the rise, is really, really tough. That's why you will not make consistent money in crude oil in the pit session because of this. See all these bars? They're taking out longs and shorts. You can't hold a position before it makes an explosive move, and there's nothing but hours of chop. You'll find yourself in a drawdown deficit, and that's it. And you're constantly fighting your way out of zero. If I were going to trade anything pit session other than stocks, it would be, I'd take a hard look at the euro. Now the euro doesn't have enough liquidity for me either, and I've tried it, and I've found that the slippage is not something I want to live with, and the size is not there for me either. But here's euro futures. They were, of course, they made their overnight move, and then they were quiet, and then they come into the day on Friday, and then nice trend down. And this is what you're looking for in a market. You're looking for something that will make it. Here's a directional move, and then a contraction, a directional move, contraction. Something that's methodical and not just explosion bars. All right, here's another day. They did this. That must have been some kind of news blast. And then nice, methodical, structured movement over time that lets you go in and take out whatever you're looking for, 6, 8, 12, something ticks, and you're good to go. All right, same situation. Nice deliberate move up, and then deliberate move down, and this went on here, whatever news that was, maybe the Janet Yellen thing, I don't know. So that's what you're looking for in symbols of whatever it is that you're looking for, not spike and slam bars, amidst chop, because you can't make money there. No one can. Don't feel bad about it if you can't. No one else can either. It's not just you. It's the market. Believe me, many times more than not, the trader isn't wrong. The market is wrong. When CoilMarkets.com comes back online with the new provider, you're going to see these stats up there, which they were on Friday, and a number of you already looked at those and so on. This is what I managed to accomplish in the S&P over the past 4 weeks. All right, week 1, 10 plus index points. Week 2, 20 plus index points. Week 3, 10 plus or 10 index points, and week 4, nearly 10 index points. Close enough. All right, and so that collectively resulted in 50-ish points in that given month, in that 4-week month period, which of course translates to that per single contract. So in other words, if you and I were just turning one S&P contract at a time, and sometimes the second one after the first one has progressed far enough so we can take the risk off. So let me say it this way. If we were trading the risk of one contract on a stop and nothing more, then this is what was accomplished then. In between there were a couple days. Thursday, last week I tried to fill a couple of shorts. The market just blew away. Friday, in the time that I sat there until noon, there were no signals. So that includes some empty days. The week before, there was just one trade that went nowhere, and then no other signals until noon. And then Tuesday, I think, can't remember what that was. It was just a chop day or whatever, but maybe it was a win or loss. I don't really recall. Nothing went on. These are just, dead periods. And then this was, of course, a very active week. And then this was a rather normal week. And that's how trading goes for me. My work day is, and let me describe it to you. I don't watch CNBC. I haven't watched it in years and years. I don't go look at financial news. I don't try to see what happened overnight. I don't care who said what. I don't care what's going on. I will look at the economic calendar to see what's coming up in a day, just so I know what to expect, around activities around reports and things. But other than that, I don't mark levels. I don't go and see what profile something or other volume did in the past or any of that stuff. There's no research on my part. I walk in and I sit down and I boot up the charts at 9:25 Eastern. And I start looking at them then. And in that 5 minutes, I'm like, okay, where's price right now? Cool, that's good. Now all I need to do is see the setups that I'm looking for. Everything I need to know is in the charts. I don't need to know anything else. And when the charts tell me to get long or short, that's what I do. It's really simple. Super simple, and that's why I like it. And then when those trades execute either to the stop loss side or to the sufficiently profitable side, I take them off and my day is done. and I don't read any post-market news, and I don't care what happened. I don't care why it happened. None of that matters. Does that sound of interest to you? Would you rather do that than, run around and take a look at and try to figure out the market and try to figure out what it's going to do and try to understand why it did what it did? I mean, who really cares? The only thing that matters to you is what goes on in your account. And if you can make something happen inside of your account to the positive, that's all that matters. And if you can't, then the rest of it is irrelevant. Okay, and so that's my day. I sit down currently. My work day is 9:30 Eastern until noon. Perfect. 2.5 hours a day. And it might even be 4 days a week, in the second half of the summer. Speaking of which, on a personal lifestyle note, I've been single for quite a while now, about a year and a half or so. And not long ago, I was introduced to someone new, a close friend of a close friend. Actually, and we met and we've known each other for a little while now, and we've had a lot of communication. She lives in Florida at this moment in time. I live in New York at this moment in time, and we're discussing what next, whether she's going to move here, whether I'm going to move there, whether we're going to move to a third location, because her career is I guess transitional is a good way to say it. Mine could be too. So that's what I have going on in my personal life, and that process is going to start to unfold sometime in July. All right, so between now and July, I'm here, I'm doing what I'm doing, and everything's cool. But when July or thereafter comes along, August, I'm going to be in a lifestyle transition. I'm not sure where I'm going to be living in the U.S., to be honest with you, or so on and so forth. Obviously, I'm still going to be in the markets, but this summer is going to be a big change for me. How does that affect you or the educational process is the question. All right. Well, first of all, I've been doing this for a long time. For a few years now, I've said, I'm thinking about retiring, and I haven't. This year, there's no more thought. I am retiring after June 30th, 2017 for new members. All right. Let me emphasize that. New members. Existing members will continue to get my support into the future because that's easy. Existing members are already up to speed. They already understand, what's going on. They don't need constant care and whatever. So between now and June 30th is the opportunity for someone who wants to learn what we're doing. I mean, if you'd like to do what I'm doing now, if you'd like to sit down tomorrow, quite frankly, sit down on Monday and pull up your charts at 9:25 Eastern, because you're going to get started at 9:30 and you didn't need to do anything else. You can come in from outside or wherever you are, take a shower, sit down, 9:25 boot up the charts, 9:30 you're totally functional, good to go. You're done trading inside of 2.5 hours, could be 30 minutes, and you're on to your life. And at the end of the week, once you become adept at it, you've booked $500 a contract or whatever it is that you target, more or less, and then you add contract size, and there you go. That's trading to you. If you would like to do that, here's your opportunity now, because that opportunity won't come in the future. If you're on board, you'll stay on board, and I'll continue to work with you. But if you're not at that point, there won't be, because I'm done, right, for the reasons stated. And I look forward to working with all of the alumni into the future. I've got people who've been here for 10, 12 years and several years and so on, and I expect they're going to stay a while longer. My current contact information. If you're interested in the home study course, it's now interactive. It's going to be a message board format wherein I deliver the information. Here's the how-to videos. Here's the how-to PDF files or whatever. And then clients who are part of this can ask questions on the board, and I'll answer them, and we're going to go back and forth like that. And, of course, the other members will learn from that exchange, will chime in with that exchange. So rather than me just delivering videos in one way and then individuals email me questions, we're going to build this into a community. All right, so the home study course is going to be a community-based thing. It's currently that price, and for existing members, it's discounted. All right, so you can get a hold of me, and we'll go from there. If you want to trade with me on a daily basis, you want to see my charts, you want to see my trades, my decisions, my logic, and my results and everything I do, it's this price, okay? Again, none of this is, if you want to be part of this, please send me an email here to this address, austinp44@yahoo.com, and state the fact that you're interested in either the Home Study Interactive or you're interested in the live, online portion, and I will send you a personalized invoice for that, which you can pay the same way that you always do, credit card, e-check, whatever the case may be. It's just an invoice through PayPal as the merchant account provider. There's no difference than a button link on a website, except I'm not doing that at this time. All right. So if you're interested in the Home Study Interactive course, which I'm going to show and explain all that's needed to know to accomplish what I do and then some, you can probably do much more. You may be more motivated than me for a number of symbols, for the S&P, for bonds, for crude oil, for whatever is moving directionally in the time frame that you're trading. That's important. Whatever your hours of operation are, you need to find something that's moving directionally consistently, and everything's good. Because your hours of operation, if you're trying to make something happen in a consistently sideways chop market, you won't make a dime. You'll lose everything. Okay? So pick a market that goes up and down more often than not in your hours of operation and apply our systematic approach to it, and you'll be fine. If you would like to be part of this, shoot me an email. We'll get you started right away. In any event, I hope this helps. I look forward to working with those of you who are serious about working with me inside, and best trading wishes. Have a great one.